Last week, a report from Hindenburg Research on Indian tycoon Gautam Adani's business empire sparked a $51 billion sell-off in shares of his group companies, pushing him 4 places down on the World Billionaire Index. The report said that the Adani Group had engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. The disclosure came just ahead of Adani Enterprises' 20,000 crore rupees open offer of shares to investors. Hindenburg Research Report on Adani Group. Today we reveal the findings of our 2-year investigation, presenting evidence that the 17.8 trillion Indian rupees, $218 billion, Indian conglomerate Adani Group has engaged in a brazen stock manipulation and accounting fraud scheme over the course of decades. Gautam Adani, founder and chairman of the Adani Group, has amassed a net worth of roughly $120 billion, adding over $100 billion in the past 3 years largely through stock price appreciation in the group's 7 key listed companies, which have spiked an average of 819% in that period. Our research involved speaking with dozens of individuals, including former senior executives of the Adani Group, reviewing thousands of documents, and conducting diligence site visits in almost half a dozen countries. Even if you ignore the findings of our investigation and take the financials of Adani Group at face value, its 7 key listed companies have 85% downside purely on a fundamental basis owing to sky-high valuations. Key listed Adani companies have also taken on substantial debt, including pledging shares of their inflated stock for loans, putting the entire group on precarious financial footing. 5 of 7 key listed companies have reported current ratios below 1, indicating near-term liquidity pressure. The group's very top ranks, and 8 of 22 key leaders are Adani family members, a dynamic that places control of the group's financials and key decisions in the hands of a few. A former executive described the Adani Group as a family business. The Adani Group has previously been the focus of 4 major government fraud investigations, which have alleged money laundering, theft of taxpayer funds, and corruption, totaling an estimated $17 billion. Adani family members allegedly cooperated to create offshore shell entities in tax haven jurisdictions like Mauritius, the UAE, and Caribbean islands, generating forged import-export documentation in an apparent effort to generate fake or illegitimate turnover and to siphon money from the listed companies. Gautam Adani's younger brother, Rajesh Adani, was accused by the Directorate of Revenue Intelligence, DRI, of playing a central role in a diamond trading import-export scheme around 2004 to 2005. The alleged scheme involved the use of offshore shell entities to generate artificial turnover. Rajesh was arrested at least twice over separate allegations of forgery and tax fraud. He was subsequently promoted to serve as managing director of Adani Group. Gautam Adani's brother-in-law, Samir Vora, was accused by the DRI of being a ringleader of the same diamond trading scam and of repeatedly making false statements to regulators. He was subsequently promoted to executive director of the critical Adani Australia division. Gautam Adani's elder brother, Vinod Adani, has been described by media as an elusive figure. He has regularly been found at the center of the government's investigations into Adani for his alleged role in managing a network of offshore entities used to facilitate fraud. Our research, which included downloading and cataloging the entire Mauritius corporate registry, has uncovered that Vinod Adani, through several close associates, manages a vast labyrinth of offshore shell entities. We have identified 38 Mauritius shell entities controlled by Vinod Adani or close associates. We have identified entities that are also surreptitiously controlled by Vinod Adani in Cyprus, the UAE, Singapore, and several Caribbean islands. Many of the Vinod Adani-associated entities have no obvious signs of operations, including no reported employees, no independent addresses or phone numbers, and no meaningful online presence. Despite this, they have collectively moved billions of dollars into Indian Adani publicly listed and private entities, often without required disclosure of the related party nature of the deals. We have also uncovered rudimentary efforts seemingly designed to mask the nature of some of the shell entities. For example, 13 websites were created for Vinod Adani associated entities. Many were suspiciously formed on the same days, featuring only stock photos, naming no actual employees and listing the same set of nonsensical services, such as consumption abroad and commercial presence. The Vinod Adani shells seem to serve several functions, including 1. Stock parking, stock manipulation, 2. And laundering money through Adani's private companies onto the listed companies' balance sheets in order to maintain the appearance of financial health and solvency. Publicly listed companies in India are subject to rules that require all promoter holdings, known as insider holdings in the US, to be disclosed. Rules also require that listed companies have at least 25% of the float held by non-promoters in order to mitigate manipulation and insider trading. 4 of Adani's listed companies are on the brink of the delisting threshold due to high promoter ownership. Our research indicates that offshore shells and funds tied to the Adani Group comprise many of the largest public, i.e., non-promoter, holders of Adani stock. An issue that would subject the Adani companies to delisting, were Indian securities regulator SEBI's rules enforced. Many of the supposed public funds exhibit flagrant irregularities such as being 1. Mauritius or offshore-based entities, often shells, 2. With beneficial ownership concealed via nominee directors, 3. And with little to no diversification, holding portfolios almost exclusively consisting of shares in Adani-listed companies. Right to information, RTI, requests be filed with SEBI confirm that the offshore funds are the subjects of an ongoing investigation, more than a year and a half after concerns were initially raised by media and members of parliament. A former trader for Elara, an offshore fund with almost $3 billion in concentrated holdings of Adani shares, including a fund that is still 99% concentrated in shares of Adani, told us that it is obvious that Adani controls the shares. He explained that the funds are intentionally structured to conceal their ultimate beneficial ownership. Leaked emails show that the CEO of Elara worked on deals with Dharmesh Doshi, a fugitive accountant who worked closely on stock manipulation deals with Ketan Parekh, an infamous Indian market manipulator. The emails indicate that the CEO of Elara worked with Doshi on stock deals after he evaded arrest and was widely known as a fugitive. Another firm called Monterosa Investment Holdings controls 5 supposedly independent funds that collectively hold over 360 billion Indian rupees, $4.5 billion, in shares of listed Adani companies, according to Legal Entity Identifier, LE, data and Indian Exchange data. Monterosa's chairman and CEO served as director in 3 companies alongside a fugitive diamond merchant who allegedly stole $1 billion before fleeing India. Vinod Adani's daughter married the fugitive diamond merchant's son. A once-related party entity of Adani invested heavily in one of the Monterosa funds that allocated to Adani Enterprises and Adani Power, according to corporate records, drawing a clear line between the Adani Group and the suspect offshore funds. Another Cyprus-based entity called New Leana Investments until June to September 2021 owned over $420 million in Adani Green Energy shares, comprising 95% of its portfolio. Parliamentary records show it was, and may still be, a shareholder of other Adani-listed entities. New Leana is operated by incorporation services firm Amicorp, which has worked extensively to aid Adani in developing its offshore entity network. Amicorp formed at least 7 Adani promoter entities, at least 17 offshore shells and entities associated with Vinod Adani, and at least 3 Mauritius-based offshore shareholders of Adani stock. Amico played a key role in the 1MDB international fraud scandal that resulted in US $4.5 billion being siphoned from Malaysian taxpayers. Amico established investment funds for the key perpetrators that were simply a way to wash a client's money through what looked like a mutual fund, according to the book $1 Billion Whale, which reported on the scandal. Delivery volume is a unique daily data point that reports institutional investment flows. Our analysis found that offshore suspected stock parking entities accounted for up to 30% to 47% of yearly delivery volume in several Adani-listed companies, a flagrant irregularity indicating that Adani stocks have likely been subject to wash trading or other forms of manipulative trading via the suspect offshore entities. Evidence of stock manipulation in Adani-listed companies shouldn't come as a surprise. SEBI has investigated and prosecuted more than 70 entities and individuals over the years, including Adani promoters, for pumping Adani Enterprises stock. A 2007 SEBI ruling stated that the charges leveled against promoters of Adani that they aided and abetted Ketan Parekh entities in manipulating the scrip of Adani stand proved. Ketan Parekh is perhaps India's most notorious stock market manipulator. Adani Group entities originally received bans for their roles, but those were later reduced to fines, a show of government leniency toward the group that has become a decades-long pattern. Per the 2007 investigation, 14 Adani private entities transferred shares to entities controlled by Parekh, who then engaged in blatant market manipulation. Adani Group responded to SEBI by arguing that it had dealt with Ketan Parekh to finance the start of its operations at Mundra Port, seemingly suggesting that share sales via stock manipulation somehow constitutes a legitimate form of financing. As part of our investigation, we interviewed an individual who was banned from trading on Indian markets for stock manipulation via Mauritius-based funds. He told us that he knew Ketan Parekh personally, and that little has changed, explaining all the previous clients are still loyal to Ketan and are still working with Ketan. In addition to using offshore capital to park stock, we found numerous examples of offshore shells sending money through onshore private Adani companies onto listed public Adani companies. The funds then seem to be used to engineer Adani's accounting, whether by bolstering its reported profit or cash flows, cushioning its capital balances in order to make listed entities appear more creditworthy, or simply moved back out to other parts of the Adani empire where capital is needed. We also identified numerous undisclosed related party transactions by both listed and private companies, seemingly an open and repeated violation of Indian disclosure laws. In one instance, a Vinod Adani-controlled Mauritius entity with no signs of substantive operations lent 11.71 billion Indian rupees $, to 53 million at that time, to a private Adani entity which did not disclose it as being a related party loan. The private entity subsequently lent funds to listed entities, including 9.84 billion Indian rupees $138 million, at more recent substantially lower exchange rates, to Adani Enterprises. Another Vinod Adani-controlled Mauritius entity called Emerging Market Investment DMCC lists no employees on LinkedIn, has no substantive online presence, has announced no clients or deals, and is based out of an apartment in the UAE. It lent $1 billion to an Adani Power subsidiary. This offshore shell network also seems to be used for earnings manipulation. For example, we detail a series of transactions where assets were transferred from a subsidiary of listed Adani Enterprises to a private Singaporean entity controlled by Vinod Adani, without disclosure of the related party nature of these deals. Once on the books of the private entity, the assets were almost immediately impaired, likely helping the public entity avoid a material write-down and negative impact to net income. Adani Group's obvious accounting irregularities and sketchy dealings seem to be enabled by virtually non-existent financial controls. Listed Adani companies have seen sustained turnover in the chief financial officer role. For example, Adani Enterprises has had 5 chief financial officers over the course of 8 years, a key red flag indicating potential accounting issues. The independent auditor for Adani Enterprises and Adani Total Gas is a tiny firm called Shah Dhandharia. Shah Dhandharia seems to have no current website. Historical archives of its website show that it had only 4 partners and 11 employees. Records show it pays 32,000 rupees, US $435 in 2021, in monthly office rent. The only other listed entity we found that it audits has a market capitalization of about 640 million Indian rupees, US $7.8 million. Shah Dhandharia hardly seems capable of complex audit work. Adani Enterprises alone has 156 subsidiaries and many more joint ventures and affiliates, for example. Further, Adani's 7 key listed entities collectively have 578 subsidiaries and have engaged in a total of 6,025 separate related party transactions in fiscal year 2022 alone, per BSE disclosures. The audit partners at Shah Dhandharia who respectively signed off on Adani Enterprises and Adani Total Gas annual audits were as young as 24 and 23 years old when they began approving the audits. They were essentially fresh out of school, hardly in a position to scrutinize and hold to account the financials of some of the largest companies in the country, run by one of its most powerful individuals. Gautam Adani has claimed in an interview to have a very open mind towards criticism. Every criticism gives me an opportunity to improve myself. Despite these claims, Adani has repeatedly sought to have critical journalists or commentators jailed or silenced through litigation, using his immense power to pressure the government and regulators to pursue those who question him. We believe the Adani Group has been able to operate a large, flagrant fraud in broad daylight in large part because investors, journalists, citizens, and even politicians have been afraid to speak out for fear of reprisal. We have included 88 questions in the conclusion of our report. If Gautam Adani truly embraces transparency, as he claims, they should be easy questions to answer. We look forward to Adani's response.